Welcome to Looking at the Markets with David Modell. Today we're going to talk about the MOBO bands. That is short for Modified Bollinger Bands or Momentum Bollinger Bands. Either way, all right, because it kind of means both. MOBO bands, it's pretty cool. So normally when I use Bollinger Bands, I'm thinking that if the candles get to the bottom band, then I might be a buyer. And if the candles get to the top Bollinger Band, then I might be a seller. Well, we're going to kind of flip that today. We're going to reverse it. But first, we're going to adjust some settings. So I'm on tradingview.com right now, and I'm using Apple stock, the 4-hour candlestick chart. Each candle is worth 4 hours of price action. But you could try this out with 1-minute candles, 5-minute, whatever, daily candles. I do not recommend trying it out with real money, though. I recommend trying it with virtual or demo trading, meaning you're not using real money. Just testing it out risk-free before you even consider putting real money into anything. You want to test it out without any risk. All right, so I'm going to use the 4-hour Apple candles here, and notice that the Bollinger Bands are up there, okay? But they look a little skinnier than usual, a little more narrow, closer together than usual, right? Well, that's because I modified them. After all, they're MOBO, Modified Bollinger Bands. And so in TradingView, it's not that hard to do. And you shouldn't have to pay for this Modified Bollinger Bands. You should be able to do it just yourself, really. I mean, if you want to pay somebody to do this, that's fine, but you could just go to tradingview.com, right? Type in Bollinger Bands. There it is. You would click on Bollinger Bands, and I already did that. And then you want to modify it, right? I'm going to click on the little gear, and you go to not style, but inputs. And the length, the look back period, is usually 20. You're going to change that to 10. And the standard deviation is usually 2. I'm going to change that to 0.8 or just 0.8. Okay, 0.8, that's less than 1. So that's how it's modified. Pretty simple. So you could just do it yourself, really. And the look back period will be much less, so it'll be more short term in terms of the measurements. And also the upper and lower bands here will be closer together. Now, we're not going to do anything really with the midline today, that orange line. We're just going to look at the upper Bollinger Band here and the lower one. And so, as I said at the beginning, normally if with regular Bollinger Bands, they're wider than this, typically. And so I'm going to buy at the lower band. And I'm not thinking momentum, I'm thinking more value, right? Trying to catch a bargain, trying to catch a low price. So normally I would wait until it hits the lower Bollinger Band and then buy, and then don't sell until it hits the upper Bollinger Band, right? Buy low, sell high. That's more of a value type of trading or investing strategy. But this is more of a momentum Bollinger Band, okay, MOBO, right? So instead, you would buy if you get a close, the candle closing above the upper Bollinger Band, like it did here. And then you would just ride it up, like you could here with Apple stock. And you don't sell or go short until you get a close below the lower Bollinger Band, like here, right? See how it closed below the lower band? And then you could either sell and just get out of the way and wait, or you could even go short, and you would have done pretty well over here because it kept on going down. The momentum was to the downside here. And when it closed, the candle closed above the upper band here, the momentum had reversed to the upside, and that worked out pretty well. You could have bought here, and then you wouldn't have sold anywhere on this chart that I'm looking at, okay? Because you need a close below the lower Bollinger Band. So still waiting. You would have made more and more money, and then finally on this candle, somewhere in this candle, you would have sold for a pretty big profit. You would have lost a little bit of that profit, but still a huge run up from all the way back here, right? Not too bad. So that's kind of how it works. And then if you go short, because the candle closed below the lower band, you wouldn't close your short position until it closed above the upper band, okay? So you might take a small loss on that, like here, for example. So there is risk here. It's not perfect. And shorting stocks is risky because you can lose more money than you have if you short sell. If you just do long only, because this is Apple stock. Apple stock has a tendency to go up over time, doesn't it? Even though it dips sometimes. So if you're using great stocks that tend to go up over time, you might choose to use a long only type of strategy. And then when it goes below the lower band, you just sell, hopefully for a profit. No guarantees, of course. So that's MOBO. Okay? Momentum, Bollinger Bands, all right? Or it could either be modified or momentum, either way. So thanks a lot for watching and listening. I hope this was helpful to you. I'm going to bring you more strategies hopefully soon. I will talk to you again very soon. Thanks a lot.